Well, hello and welcome to another in this series of videos where we're taking a closer look at the MSI indicator, the market strength indicator from quantum trading. And in this one, we've moved to stocks. And I hope you've had a chance to watch the earlier videos where we've covered futures, ETFs, and also the introductory video where I've covered a lot of the fundamentals of how and why we created the indicator and ways to use it. And this is where we're looking at specific applications for the indicator itself. And as I say, here we've moved to stocks, which is not strictly true because I've also got ETFs on here as well. So we've got a mixture of the two. Time frames are 3 minute, 5 minute, and 10 minute. And on each one, we've got 4 stocks. We've got Meta, we've got Nvidia, we've got Tesla, and we've got Apple. And then in addition to that, I've also added on the SPY, which is the brown line here. And finally, to bring in this idea of always looking at things correlating markets we should expect to move together, like we have done with the indices, with stocks, for example, this group of stocks, technology, we might well expect them to move together. Not always, but generally speaking, you would expect that typically. And what I've also added on here with the dash green line really to highlight it is the XLK, which is the technology sector. So typically what we would expect to see is the technology stocks, broadly speaking as a group, moving in line with the technology sector. And as I say, it's really to bring in this idea of using the indicator in this way, either to look at divergence, to look at trends, to look at potential reversal points from overbought or oversold areas, and also to look at the idea of groups moving together, the flow of sentiment for indices, the flow for a sector here, for example, or simply the flow or correlation between 2 or 3 stocks that you may be considering. You may want to see divergence if you're looking at maybe pairs trading or something of that nature. Alternatively, you may want to see very close correlation. So it's bringing all these ideas together in these videos to, I hope, give you some ideas of your own to build on these that we're covering here. So as I say, we've got the 3 minute, the 5 minute, and the 10 minute. The dash line is the XLK, so that's our sector, that's our technology sector. And then we've got our 4 stocks, and we've also got the SPY here. And broadly speaking, on the 3 and the 5, you can see that they are pretty much in close agreement. The interesting thing here is once we move to the 10 minute, you can see that Meta, which is the purple line here, you can see how Meta, whilst these were all climbing prior to, where are we, 1800, 1830-ish, Meta continues on in that trend upwards, and yet the others reverse. So there we have some divergence coming into the market. There may have been a reason for that. It would have certainly been self-evident on the chart. But this is always something to be aware of. Whatever aspects of a stock or an ETF, an index or a group we're looking at, when we start to see divergence, in other words, one group is moving in one direction and perhaps the stock or whatever it is we're considering is moving in the other, that could potentially be a warning sign of weakness. In other words, as I explained in one of the other videos, when we're looking at groups of things moving together, it's very much the sentiment, the river of sentiment. So think of it as a river. And generally speaking, we want to be trading or sailing with the river, if you like, paddling down the river. The river's moving downstream and we're moving with it in our canoe or paddle boat or whatever it may be. There are occasions when we can paddle against the current, for sure, and go upstream when the river's moving downstream, but that is a higher risk proposition. So we've always got to be conscious of that. So whenever we see divergence in that way, particularly when we're looking at groups, then clearly it raises a red flag. It's potentially increasing the risk of whatever it is we are involved in, whether it's from a trading perspective or an investing perspective. And there's just, as I say, a little example here. We've got Meta, which continues to rise through this pullback in both the sector and also the other associated technology stocks. So it's quite an interesting divergence there. Doesn't go on a great deal. It's only over for an hour or so. It's from roughly 6 o'clock through to 7 o'clock. And then as everything picks up again, it just really re-engages, if you like, with what Meta has been doing in that period, that 1 hour period. And then we come to the end of the session where everything is re-engaged again, if you like. So that's on looking at the market strength indicator across multiple timeframes in this way. And now, again, I've broken things out into a separate workspace where we've taken one of these out, and we'll just look at it in isolation. So let's do that now. Okay, so here we are. And we've got 3 elements again. And the 3 elements we have here, we have the element over here, which is our index, which in this case is SPY. So that's giving us a straight heads up on sentiment from the index itself. We then have Tesla, which is I have on a 5-minute, 10-minute, and 15-minute time horizon. And then at the bottom, really to complete the set and give us that alternative view, if you like, or confirmation view, which is really what we want to see, I've got the XLK. And again, I've got that on 5, 10, and 15 minutes. So we are looking at the stock. If we're day trading Tesla, for example, we're combining those other elements. We're bringing in the elements of the index, and whether the index is looking oversold or overbought, or if it's looking strong, trending higher or strongly trending lower. What is the index doing? So we've got our index view, we have our stock view across multiple timeframes, and then that is reinforced, hopefully, with agreement from our sectors, and we've got the XLK below. And of course, underpinning all that, we have our volume price analysis methodology. And as you can see in the 5-minute time frame here, we have rising volume, a very nice example. I'd be hard pushed to draw one better than that, to be perfectly honest. Nicely rising volume, and we've got a nicely rising trend breaking away from this nice support platform that was building on the accumulation distribution indicator, which I've got running as well, and moving through that level of resistance there. So we've got a nice platform of support as we move up higher. And then as the reversal comes in, as we hit this level up here, you can see we've got falling volume, which is telling us that the selling pressure under those 3 candles is waning, and therefore the trend to the downside is unlikely to develop very much further, which it doesn't, and we move back into a little bullish uptrend as we come towards the close of the session. So the beauty of it is we really have all our elements here. We have our index, we have our stock, our ETF, whatever it may be, and below that we have our sector. And of course, on our sector, we also have volume as well. So we can apply exactly the same volume price analysis to that particular chart or group of charts, and again, across multiple timeframes. So the whole thing reinforces itself. And this, again, I've just created this to give you some ideas, some food for thought, to think about what it is you are trying to do as a trader or investor, and putting these elements together to give you different views and supportive views of what it is the market sentiment is for that particular stock or index or ETF, whatever it may be, across multiple timeframes, and bringing all the elements together. And with your market strength indicator on the left-hand side, in the way I've set it up here, very similar to the way we set things up for Forex trading as well, where we have the currency strength indicator. And I'm going to bring that into another video, actually, because I want to show you that relationship, certainly in terms of the dollar, at any rate, when we're looking at commodities, for example. So again, it's thinking about the indicators, thinking about how we can use them in a creative way to bring together a blend of the sentiment, a blended view of what is going on in related markets, and so gives us more confidence when we're taking a position in the market. So I hope you've enjoyed this particular video. Lots more to come as always. So thanks for watching. See you soon, and bye for now.